Ladies and gentlemen, good day and welcome to Lumax Industries Q3 and 9-month FY21 earnings conference call. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal for an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Deepak Jain, Chairman and Managing Director. Thank you, and over to you, sir.
Good afternoon, ladies and gentlemen. Let me, on my behalf, extend a very warm welcome to the Q3 FY21 earnings call of Lumax Industries Limited, and also our first investor call for the calendar year 2021. I truly hope we will get better health and happier times ahead. Along with me on this call, I have Mr. Anmol Jain, Joint Managing Director, Mr. Vineet Thani, CEO and Senior Executive Director, Mr. Naval Khanna, Executive Director, Lumax Management Services, and from the finance team, Mr. Sanjay Mehta, Mr. Shrutikant, and Ankit Thakral. And also we do have our SGA, our Investor Relations Advisors. The results and investor presentations are uploaded on the stock exchange and the company website. I hope everybody has had a chance to look at it. Before we start with discussions on the financial performance of the company, I would like to share few highlights of the automobile industry. Growing preference for the personal mobility and the gradual opening of economic activities have added some momentum, and the industry is now seeing good signs of recovery. While the festive season brought back some favor in specific segments, the overall economic scenario would determine the industry's performance going forward. It is a fair estimate that the next fiscal year would be better than the current year, because now economic activities are getting back to normal, and also the expectation of vaccine availability to all citizens in the near future has risen, which has boosted the consumer sentiments. After the announcement of scrappage policy to government and PSU, in the budget session it has been extended for private vehicles too on voluntary basis. We appreciate this move and expect its positive impact on the industry. The spend on infrastructure projects like roads and public transport will also help build demand for vehicles over a longer period. We are still contemplating the impact of the PLI scheme on the auto and the auto component sector. We expect further clarity from the government and will then be able to evaluate the benefit of the same. We at Lumax believe in changing for good, and we have adopted pandemic-driven positive change to operations. COVID-19 has redefined the next normal operating model, and our teams has put in tremendous efforts to keep operations running smoothly, which is why today we are able to get back to a normal level of operations. I would now like to give you a brief overview of our business at Lumax Industries. Our company is engaged in production and delivery of automotive lighting systems to two-wheeler, passenger car, farm equipment space, and commercial vehicle segment. We are the preferred supplier to OEMs in India and continue to be the market leaders. The feature that differentiates us from our peers is a strong branding and a very good and large manufacturing footprint all over India, including the strategic partnership with Stanley Electric Corporation Japan to capture the market share at the right time. We utilize our existing infrastructure to assemble and deliver a final product quickly and efficiently to meet the customer's specific needs. The Bangalore plant of the company secured first position for becoming self-reliant in low-cost automation, localization, and R&D activities, and second position for digitization in smart manufacturing process control in the ACMA's National Case Study competition held on 4th November 2020. The Bawal plant of the company also secured third position for digitalization and elimination of the chance of wrong product supply to customers and for CSR activities for supporting society and stakeholders during COVID-19 times in the ACMA competition held again in November 2020. Now, I would like to hand over the line to Mr. Sanjay Mehta, Group CFO, to update you on the financial performance of the company. Mr. Mehta, please go ahead.
Good afternoon, everyone. Let me brief on operational and financial performance of the company. The share of LED lighting stands at 33% of total revenue, and that of conventional lighting stands at 67% during 9 months ended FY21. The product mix for Q3 as a percentage of total revenue is 66% of front lighting, 25% of rear lighting, and 9% others. The segment mix for Q3 as a percentage of total revenue is 63% passenger vehicle, 31% two-wheelers, and 6% commercial vehicle. Revenue stood at rupees 446 crores for Q3 as against 383 crores Q3 last year, up by 16%, led by festival season demand and continued positive sentiment. For 9 months, it was 922 crores as against 1,214 crores in 9 months last year, down by 24% due to abnormal Q1 of FY21. The revenue for Q3 stood at 435 crores, excluding mold, as compared to 360 crores last year, up by 21% against industry growth of 16%. For 9 months, the manufacturing revenue stood at 885 crores against 1137 crores last year, down by 22% against industry downfall of 25%. The company reported consolidated EBITDA of rupees 50 crores in Q3 against 44 crores last year, up by 13%. EBITDA margin stood at 11.2% for Q3 as against 11.5% for Q3 last year, down by 30 bps due to raw material increase in the current quarter, the recovery of which is expected from customers in coming quarters. Profit after tax and share of associates stood at rupees 20 crores as against 19 crores in Q3 last year, up by 5%. The capex during 9 months was 29 crores and estimated for the 12 months is rupees 50 crores. That is all from my side. We will now open the call for questions.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask a question, please press star and 1. The first question is from the line of Ashutosh Tiwari from Equirus Securities. Please go ahead.
Yeah, hi. So firstly, on the mold sales, what is the number for the 9 months? Is it like 37 crores?
Yes.
And so this is considerably lower than last year, 77 crores in the 9 months. So is it, I mean, is there something to read into it, or this is just like it will normalize in next year? I mean, I want to understand that whether in terms of new model on which we are working upon, is there a drop over there, or I mean, it will probably more sales will normalize going ahead?
Last year the mold sales was 77 crores, 9 months ended, and this year it was 37 crores. So because of Q1 and Q3 pandemic, the mold sale has been extended, and we are expecting in Q4 or coming FY22.
So I am Vineet Sani this side. I'll answer your question. See, mold sale otherwise will be normal as last year. Only thing is that certain new launches have been a little bit postponed because first quarter there was nothing in the industry. So overall nothing has changed except the pattern. That's it.
Okay. And also, I want some color on the competitive intensity in this four-wheeler lighting space. I think Magnetic Marelli Motherson also is aggressive, and so is Minda. So are you seeing any kind of the pricing pressure because of this factor, or also market share loss in, say, OEMs like Maruti and all, or that is not a big threat per se?
So again, Vineet, so I would say that nothing significant change. Whatever pressures on pricing were there in last few years, they continue because of competition. Nothing has changed as such in this year. So we continue with the same pricing competitiveness among the suppliers.
Okay. And lastly, on the margins, so where do you see, like, say, what is your target for, say, over next 2-3 years, where we want to reach in terms of margin? Also considering the fact that the recently even oil prices have gone up, so plastic prices would have also gone up. So can that impact in near term, and say over next 2-3 years, what margin range we are looking at?
We have been focusing on the double-digit EBITDA percentages, as we have been telling always, and increasing it gradually, step-by-step process to something like 11 to 12% step-by-step. But we want to retain the margin in double-digit numbers. Pressure of raw material will come, but we have customers who would compensate for that. There is a lag into this. However, that gets compensated.
Okay, thanks a lot. I'll join back with you.
Thank you.
Thank you very much. Next question is from the line of Vimal Gohil from Union Asset Management. Please go ahead.
Thank you for the opportunity, sir. I hope I'm audible.
Yes, you are.
Yes, you are.
Thank you, sir. Sir, my question was on our key customer, Maruti. So if you see, Maruti's production growth in this particular quarter has been about close to 28%. This is versus 14% growth in our revenues for coming in from Maruti. So what could explain is it just a model mix that has impacted our number this quarter? That is question number one. The second question is on the overall industry versus Lumax. So the expectation is that the overall LED penetration is expected to go up to 50% from the current levels of 35, which is what Lumax is at. So I just wanted some color from the management that what will drive this increase in LED for Lumax. I mean, are you looking at incremental market share from your existing customers like Maruti, because that will be imperative because they form a very high percentage of your overall revenues. So how will you manage to gain market share from your wallet share from your existing customers in the wake of very competitive environment?
So this is Anmol Jain. I'll take the first question regarding the Maruti Suzuki numbers vis-a-vis our numbers. Maruti, as you rightly said, in Q3 grew by 29%, whereas our revenue with Maruti grew by 16%, and this is mainly on account of the model mix, whereas the Baleno and the Brezza models were high contributors to Maruti numbers, whereas Lumax is not present on these two platforms, and hence the disparity between our numbers and Maruti numbers. I'll request someone else to take the number 2 question about the LED penetration and wallet share going forward.
So this Deepak here. So let me just give you also just to supplement what Anmol said, right? If you look at our other basically customers, and this is also a correlation in our marketing strategy. So for example, if you see in the 9 months, Tata Motors has probably garnered a lot of market share. Their growth also has been about almost 40%. However, our account with Tata actually grew almost close to 55 or 57%. And it's also significant in other players, like, for example, in Hero as well. So I think clearly there is obviously a volume mix or a model mix, which is centric in lighting. Usually now you have per model, per supplier, maybe one for lighting in terms of headlights and second for taillights. However, with customers, usually wherever we are, we have a high market share based on the capacities, investments, like, for example, Maruti Suzuki. There is an understanding that they will keep the overall pie kind of consistent with basically wherever the standardized basis. But however, we find that with technology innovation, specifically in LEDs, there are segments where I think Lumax has clear opportunity. For example, it is there in FES, in commercial vehicles, in farm equipment, agro segment, also in certain accounts like, for example, MG Motors, for example, in the TVS, and one or two other specific accounts where we were not having high wallet share. We have started to penetrate, and you'll see probably garnering more market and more basically top line and bottom line. So that's been a very clear-cut strategy. You have to well understand that the lighting company, Lumax Industries, does have a high market share in basically India. However, we are going now specific to clients where we were not there or were not having in segments in particularly where there were not too much of technology play. And I think the LED transition is helping us in there.
Fair enough. So just one question. It was very encouraging to see growth coming back very nicely in our Honda two-wheelers account over the last 2 quarters. If you could just tell me what has led to this. I mean, have we gained back market share, or did we, or something else has happened there?
Vineet, would you like to answer that, or I can then go ahead and supplement?
Yeah, I will. So this is basically what we have just explained. As we penetrated into LED segment, we have got certain orders.
Mr. Sahni, we are not able to hear
and
you.
Therefore, our share with HMSI has increased.
I'm so sorry, sir. I lost you in between.
We are the first source for the high technology lamps with HMSI today.
Mr. Sahni, sorry to interrupt.
Yeah, so this is Deepak here. I think his audio was not very clear. I think particularly it has been on certain models on HMSI that we have basically been there, and with this thing opening up, they've actually sold more these kind of models. And hence, I think we were already there. And I think based on customer growth of almost 4%, we actually grew about 25% on HMSI. So I think that's one of the reasons for HMSI growth.
Thank you. So just one last data point question from my side. If you could just highlight what is the gross debt level and the net debt level on the balance sheet currently, that would be all from my side.
So we are having the gross debt of almost around 300 crore and net debt of around 290 crores. That is including the working capital of 280 crores. So term loan is around 10 crores.
Thank you so much, sir. All the very best. Thank you.
Thank you very much. Next question is from the line of Abhishek Jain from Dolat Capital. Please go ahead.
Thanks for taking my question. Sir, as you are looking to enter into the HVAC panel and electronic cable business, so just wanted to understand what is the progress and what sort of the capex you have done for this.
So we the CAPA plan for that PCB plant is around 85 crores, and we have already done almost 60 crores of that.
Okay. And when it is expected to be commissioned?
It is in Q2 FY22.
And what sort of the revenue can we assume for the FY22?
Sorry to interrupt. Are you asking about the new bowel facility or about the HVAC product?
HVAC product.
Okay. Though Mr. Sanjay Mehta was referring to as about the new bowel facility in which the capex is 85 crores.
Okay. And what about this HVAC panel? CapEx?
So HVAC panel, as I mentioned last call as well, I think there is a understanding now with Stanley Electric that we would probably get this and expand our product portfolio. We are expecting a market opportunity next 3 to 5 years. We are still under the discussions with OEM. The electronic facility, which basically they just spoke about, that actually will also have the infrastructure and house the HVAC panel. However, we are still expecting the production to start somewhere in the later part of FY22. Once we confirm the orders from our OEMs, we will then be able to make a disclosure on that.
Just to supplement what Deepak mentioned, we are in advanced stages of discussions for HVAC orders Phase 1, we will probably do a just local assembly or a pass-through, and then with maybe over the next couple of years, we will get into the localization and value addition mode.
Okay.
That's when the investments will kick in.
Got it. Sir, my next question is related with the PLI scheme. So what sort of the direct benefit you are looking from the PLI business? As we know that the export is quite negligible. So do you qualify for the taking benefit of PLI?
Abhishek, let's get the PLI scheme first, because still the contours of the PLI scheme is still not clear. And I think the industry is very much looking forward to first get the PLI scheme. You're absolutely right that it is mainly to drive on export champions. And based on what thresholds and filters there would be, once the scheme is out, we would be able to then take a better assessment.
Okay. Sir, my last question is related with your current utilization and order books for the quarter 4.
It is around 85% current utilization of the capacity.
Okay. And how much order visibility for the quarter 4?
So for quarter 4, we have a strong order book. We are expecting a pretty significant jump in quarter 4 in our revenues. By end of quarter 4, we should be almost close to 95% capacity utilization, for which the investments made and in the forthcoming times will actually help in getting a incremental revenue next year.
So as most of the companies are talking about the shortage of the semiconductor, so will it impact the production of the passenger vehicle in quarter 4?
I think, again, let me put it like two ways. You know, there is an industry-specific issue, and then there is a company-specific issue. The semiconductor issue is a real issue. It's a global issue, and it may impact the industry going forward in Q4. However, when it comes to Lumax Industries, most of our basically electronic parts are being sourced and protected by Stanley Electric. So we don't see any direct impact. However, if the vehicle industry in fast cars or other segments, even including two-wheelers, do get impacted, then because of the intricacies of the supply chain, there may be some rationalization on volumes.
Okay. Thanks, sir. That's all from my side.
Thank you. Next question is from the line of Viraj from Securities Investment Management. Please go ahead.
Yeah, hi. Thanks for the opportunity. I just had a couple of questions. First, just coming back to the semiconductor shortage, the chip shortage. If one were to understand this a little better, so if we participate in multiple segments, you have two-wheelers, PVs, CVs, and probably to some extent in farm as well. So if one were to understand the impact of this across different segments, where is it more severe and where is it relatively less affected as of now?
So I think basically what our understanding is that the shortage of semiconductors is not only on fast cars, CVs, and two-wheelers. All three segments will get impacted. However, it has to be more granular in terms of which customers may get more impacted. Our assessment shows that there could be more impact on customers like Mahindra's and Tata's because of their single source policy, where some of the OEM or some of the tier ones have had certain constraints. But you have to also understand that given the overall India consumption of semiconductors, it is not so significant as it is in other markets. So there is an availability and opportunity to also stock order it and basically keep certain stocks. So that's where it is. And as I mentioned before, the overall industry estimate is that in Q4, there could be some impact to about close to 10 to 15%. But again, I think the OEMs and tier ones, which are directly impacted, are working very hard to see other sources and procurement opportunity.
Okay. That's very helpful. Second question is, you talked about us gaining shares, say, in HSMI and TVS. So can you just, provide some perspective, who are we gaining from and how's the pipeline looking with those customers now?
Vineet, would you like to answer this?
To TVS. So TVS has one competitor which was predominant for years into TVS. So we have been able to make headway there and gain market share, and primarily due to technology, primarily due to LED technology that we have offered to TVS at a competitive costs. And with that, we have been increasing our market share with TVS, and the plan is to grow bigger with TVS.
Okay. So what will be our wallet share with, say, TVS and HSMI now?
So in HMSI, we are around 55 to 60% in headlamps and around 30% plus in tail lamps. TVS, we have just entry. So we are at around 10-12%, and we have plans to enhance that.
So the presence so far has only been on the non-LED part, and now we are kind of gaining share in the LED. Am I right to think it that way?
No, we entered through LED parts, like there are models like NTORQ and all. So that was our entry pitch actually on higher technology.
Okay. Just last two questions. One is on the margin side, post indication of the PCB unit, whole idea was that we are much more backward integrated and that should aid a certain amount of margin, at a certain utilization. Now, since you're expecting close to 100% utilization by Q4, how should we look at the overall margin, sustainable margin, say, over a long term? I understand in the near term there may be some RM pressures, but if we have to look at also next 2 to 3 years, what is the sustainable margin profile a company can be at?
So as explained before in the earlier question, we are targeting to sustain at double-digit numbers, and we want to move in near term, step by step, to around 11 to 12% EBITDA levels. That's our plan.
Okay. And last question was on the debt part. So I understand large part of it is still working capital led, but do we have any roadmap or any plans in place to further bring it down, or we are comfortable with this kind of
So, Sanjay, would you like to speak? But I think we are at this moment comfortable with our debt equities and the debt that we have taken. And if you see, primarily the debt being reflected is a short-term working capital debt. We do not have any long-term debt, very, very insignificant.
At present, it is nil. The debt equity ratio is 0.03, and I think by end of March it will be 0. The only debt we're carrying is the working capital limit.
Okay, fine. I'll come back in the queue. Thank you very much.
Yeah, thank you.
Thank you. Next question is from the line of Aditya Makharia from HDFC. Please go ahead.
Yes, just had two questions. One is our market share in the car business is around 40%, is what I understand. Who would be the next 2-3 players, and are they close to us in terms of market share, or is there a significant gap?
Okay, so this I can explain. See, if you consider the group companies, which is us and our associate company, SL Lumax, our market share is significantly higher because SL Lumax serves the Korean customer, that is Hyundai and Kia.
Right.
Right. So if you take cumulative, the market share goes up to around 65 to 70%, which means that all other players have big gap from our side.
Okay.
Yeah.
And this is both in headlamp and tail lamp, what you're saying?
So head we enjoy a major share, and in tail it is more distributed because tail is less complex as compared to headlamp. So tail there are a couple of players more than headlamp. So in headlamp we are predominantly high. In tail it is equally distributed. Okay, so you're saying we're 65% market share effectively? Yeah. Okay, and who would be the other players? Would it be Minda? Would it be any, just so that we have a sense? So there are all other players, like Minda is there, Magneti Marelli is there, IGS Koito is there, and there are in fact total in India there are around 19 players, organized and unorganized. 11 players are in OEM.
Oh,
So
okay.
It's fairly competitive.
Okay, great. And second is just on your this HVAC panels which you mentioned, to an earlier analyst. You said that first you will just, I guess integrate and then the backward integration will happen later. So I thought because we are also making the PCB unit in-house, that is going to allow us to play a bigger role in the HVAC panels from the beginning. But what you explained, maybe it seems that your localization program for HVAC is going to be pushed out. Is that fair?
So these localization programs are more governed from what and how customer wants, right?
Mm-hmm.
And therefore, these are the steps mutually agreed along with our customer. And the first step is always very difficult, and in OEM, they want to move step by step. Mm-hmm. And I agree with you, with our localization of PCB and a new plant coming up, it will help us in moving faster. The steps will not change, but we can move faster after OEM gets the confidence.
This is Anmol Jain. Just to supplement what Vineet mentioned, there is also a very rigorous validation process which has to be followed by the OEMs. So any localization which would happen would also undergo a validation cycle, which usually takes at least a couple of quarters.
Okay. And just to check, when you're saying you're talking to an OEM, I assume this would be one of the bigger companies and not just a niche one of them.
That's correct. It would be one of the main clients.
Got it. Okay. Thanks a lot.
Thank you. Next question is from the line of Shanti Patel from Shanti Patel Investment Advisors. Please go ahead.
Good afternoon, sir. But all the questions are already asked by a previous analyst, and I got the answer. Thank you very much.
Thank you very much. The next question is from the line of Hasmukh Gala from Finvest Advisors LLP. Please go ahead.
Hi, Deepak. Congratulations for really good set of numbers in these trying times. Just a couple of questions. My first question is, as you said, sir, that we had this Swift and Desire as a major model which was driving our growth, and not Brezza and the other models, Baleno, which we do not have. How do we engage with a major customer like Maruti to get some new platform so that whatever investments we have made in the capacities, we can get good returns out of that? That was my first question. My second question was on this effective tax rate. How should we look at it? Because in 9 months it is very high. If you consider, because there is negative, and in this particular quarter it has been 60%, on 25 crore profit, 15 crore tax. That is the second question. And my third question is, have we made any progress in this HVAC product line in the PCB?
So thank you, Asmukh bhai. I'll take the first and the third question.
Yes,
probably Sanjay Mehta can give you some clarity on the second one.
Sure.
So I think, as I mentioned before, I think we are probably one of the largest players in terms of lighting for Maruti Suzuki. Mm-hmm. Maruti has a very, very stable sourcing policy, where even if there are 3 or 4 other makers on their panel, they would actually respect first whatever the investments have been done. Now, you have to also understand the industry has been going through a tough time, where it's not just pre-COVID times, but pre-COVID also, we had seen an industry decline. So the customer is very, very respectful about the capacities what we have, which are in place. They also have pretty much a logical distribution on what kind of basically models we are catering to. And based on that, of course, when they float the RFQ, it is a very, very competitive kind of process to get the business. But, we have recently been awarded, again, the Swift platform, which was up for rebidding. However, to gain further market share, I think that it all depends on the QCD and technology parameters today. So we are pretty much aggressive and engaged with Maruti Suzuki, with of course our advantage being that we have now manufacturing footprint wherever Maruti Suzuki footprint is, and also we are a key player to Toyota with the Maruti Suzuki and Toyota alliance coming in.
Yes.
I mean, so that would also help us in the future. But these are decisions which are made for 3 to 5 years because all sourcing programs do not run concurrently. So I think we are pretty optimistic to retain and further stabilize our growth plan, because we definitely do understand and appreciate that Maruti Suzuki has a very, very deep and significant impact on the passenger car. And Vineet had said already that through our associate company, we do enjoy 100% share with Hyundai and Kia. So if I look at it, the overall piece of pie, you have Maruti with Hyundai, Maruti you have 50, with Hyundai and Kia you're about 20-25%. So that way you've kind of basically already got 70-75%, and hence the focus in the passenger segment is then to enhance our wallet share with other growing emerging players like Tata Motors, Mahindra. We already have a strong portfolio. And also maybe certain new technology players like MG Motors. So that's one part. Regarding HVAC, I think clearly it has been in the Auto Expo, February of 2020, we had actually displayed and actually opened up our alignment and assignment with Stanley Electric that from lighting we'll go with HVAC. However, I think with this COVID, I think the customer we were talking about, they've actually kind of probably maybe not significantly delayed, but there is a little bit of delay on the product portfolio, and hence they have probably said that let's start on first importing or making it KD, doing some assemble and testing here, and then we get into a deep localization program. So we'll have better clarity going forward, but I think with the first program, we will start out with FY 2022.
Maruti, just wanted to ask, have they crystallized their future capex programs so that we also, know that how we will have to augment the capacity?
Yeah, so they have already done that. Rather, today only they have probably given to the supply chain certain of their volume projections for the next year, and it looks good. I would not like to comment particularly on Maruti's basically specific programs and capex. I'm sure they will be making their disclosures, but I think we're very much attuned and aligned with them on it.
And on the ETR.
Yeah, regarding taxation, I think Mr. Sanjay Mehta can just speak.
The tax rate is because of deferred tax, it is coming to 46%. Otherwise, the income tax is as per the normal rate of 31-32% because of MAT and all.
Okay. So we have still not adopted the new tax, no?
No, we have not adopted because we are carrying sufficient MAT balance.
Acha. Okay.
And deferred tax rate is high because the deferred tax items are fixed in nature, and due to the exceptional year, the profitability is low. That's why the deferred tax rate is high, seems high. But the next year going forward, when we achieve the higher profitability, it will be simplified.
Okay. And sir, what will be our capex for next year?
Capex for next year is
So next year capex visibility is not yet completed. The budgets are still in the making and would be only completed by end of March. So I would be able to give you a better clarity only then. But we do not anticipate any significant capex next year. There might be some expansion plans, but we do not envisage any greenfield project to be put in. So hence no substantial investments in the pipeline.
Okay, so it could be around 80-100 crore type normal?
Yes, possibly.
Okay. Thank you, sir.
Thank you very much. Before we take the next question, a reminder to the participants, to ask a question, please press star and 1. The next question is from the line of Malhar Hemal Manik, an individual investor. Please go ahead.
Hello, am I audible?
Yes, you're audible. You may proceed with your question.
Yeah. First question, that in your investor presentation you have put a metric saying cash PAT. So just to confirm, by cash PAT you are meaning PAT plus depreciation.
Can you repeat the question, please? Because your voice is too loud.
Yeah. So in your investor presentation, you have put one metric saying cash PAT. So just to confirm that by cash PAT you are meaning PAT plus depreciation.
Yes.
Oh. Now also can you share your market share? Like your market share is around 50 to 60%, but what is your market to Maruti?
So this is Anmol here. So our market share, or I would say wallet share, differs from customer to customer. In Maruti, as Vineet had already mentioned, we would command a wallet share of headlamps to the tune of close to 60%, and tail lamps would be close to about 30 to 40%. And then it differs from customer to customer. But overall, as Vineet had mentioned, our market share in lighting, including our associate company, SL Lumax, would be in the range of around 60 to 65% in the lighting segment.
Oh. Now regarding your major customers, Maruti is around 36% of your revenue. So what is your view on this and like customer concentration, and is there any plan to diversify?
I'll take that question. This is a question which a lot of investors have been called for over decades, and I think we are very clear that we want to engage with all the OEMs present in India and have significant wallet share, because lighting is a product line which basically comes in. We really don't care much if Maruti Suzuki is at 35% today, or it would be probably at 20% tomorrow or 40%. But I think you have to understand very clearly that Maruti Suzuki has a very, very deep, significant impact currently on the passenger car industry. And the passenger car lighting is probably having a much more significant revenue share than if I compare it with the two-wheeler and the commercial vehicles. So I think we are happy with the current basically Maruti Suzuki share, but we are also very, very aggressive in other customers where we feel that there is opportunity to grow market share. Significant being like, for example, recently Tata Motors, where they have done a very, I would say, handsome comeback, specifically during the COVID times, and gained a lot of wallet share in the industry. And happy to say that we have also gained with Tata Motors and grew with Tata Motors as an account. So, those are things which comes in. Mahindra did not have a very high customer growth, but I think Mahindra, we've already made we already enjoy a very strategic relationship and partnership with them. So I think if I look at the key customers for the passenger car or basically the SUV segment, it's Maruti Suzuki, including SMG. We have Mahindras, we have basically Tata, but then of course we do have outlook on Toyota and Honda as well. So that's the overall pie which we are pretty happy with as of now.
Okay. Sir, also can you please share your margins and return on capital employed from the LED segment?
Sanjay, maybe you want to take that?
Yeah. We are having the healthy double digit in return in that, the margins in the LED segment. And also a return on capital is also in a healthy of that around 18 to 19.
In the LED segment, right?
LED segment.
Okay. And last question, that Stanley Company is the co-promoter of Lumax. So, if you could please outline some of the key strengths of Stanley and how did you choose upon Stanley for a co-promoter?
Sorry, I was not very clear on the question. You said Stanley is a co-promoter of Lumax Industries, and after that, what was the question?
Yeah, so what are the key strengths of Stanley and how did you choose Stanley to be the co-promoter?
Well, Stanley has actually been so very proud to say that we have a very strong partnership for almost now 38 years. I think you would probably not find that many partnerships, especially between an Indian and a Japanese corporate, which is equivalent. So Stanley has 37.5, Gen Family has 37.5. So together, as promoters, we drive this company forward. Stanley also, with the trust in the relationship, has given the management control to the Gen family within India. And of course, they support us completely on the technology transfer as well as the global relationships which they enjoy with the customer. Stanley is in the top 2 lighting players in Japan. It is in the top 5 in the world. And I think, we are also there where Stanley has a very, very significant presence in not just the pass car segment, but the two-wheeler segment because of the strategic relationship with Honda. So we continue to enjoy this relationship going forward, and I think the testimony was that after 37 years of having a relationship on lighting as a product line, now Stanley has decided that we will also, together with the Gen family within Lumax Industries, also bring other product lines, and HVAC was one which we were discussing on. So I think we enjoy a good relationship, and we look forward to maintain our market leadership through this effort.
Okay. That's it from my end. All the best for the future. Thank you.
Thank you.
Thank you very much. A reminder to the participants, to ask a question, please press star and 1. Next question is from the line of Kripa Shankar from Dolat Capital. Please go ahead.
Yeah, hi. Thank you for taking my question. Just one question on that, sir. We have a LED share come down to 31%, like in this quarter. Any specific to highlight on that?
I think it's primarily just to do with the depressed market, the COVID. We see, and I've been saying that in a previous call, that we see that the 50-50 share should be coming in very soon. We expect the next year to be a strong financial year in terms of growth, and many, many new launches also coming in, basis which we see that the visibility of LEDs will again resurge with almost probably a higher share than today.
Okay. So what is like trend in two-wheeler and four-wheeler of the LED penetration now? Because there are other input costs it's higher. So maybe the OEM is facing challenges to add some kind of premiumization to their product. So do we come with this kind of scenario, or like what is the trend of the LED penetration?
I think it's a good question. There is a steep increase on certain base metals in the industry. Also, the commodity prices are rising. As an industry, this is not a first-time trend. However, we do have contracts with our customer, which protects us from these rising escalations. Will it now significantly impact the LED transition? Our personal view is not, because LED transition is now well accepted within India, with also new regulations coming in, which probably would give more focus and impetus on lightweighting, on safety, as well as on basically efficient engines. LEDs would probably garner more and more acceptance, and of course, LED does have a much more bigger advantage because of aesthetics and also the light output performance. We don't see that because of the margin or the price pressures or the base metal prices increase or commodity price increase, a customer will change the aesthetics of a vehicle because of that. So we continue with our guidance of having a 50-50 LED and LED growing more significantly than conventional lamps.
And how much will be our import content into that? Or do we facing any challenges for procuring the raw material for LED content?
No, as I said, we have good, strong contracts and also use Stanley's global basically reach. Stanley also do produce its own LEDs in-house, so we don't see any significant disruption because of the shortages on our LED procurement as such. So that's what we are as of now.
Okay. Thank you. Thank you, sir.
Thank you very much. Next question is from the line of Ashutosh Tiwari from Equirus. Please go ahead.
Yeah. So you mentioned that we have again got the Swift model. So earlier in the previous model, only in the top variant, the LED headlamp was going. So is there a change in the new model, or still I think only top variant gets LED headlamp?
Right now, we won't be able to give you that information because still I just said that we've got the Swift platform. The designing still needs to be done on that. And based on basically the correlated design input and intent of the customer, we'll be able to understand better going forward on the design input, that what and how it would be in terms of LEDs.
Okay. And secondly, compared to, say, a previous shift or maybe LED lighting, say, 1 year back, are you seeing a significant compression in the pricing with volumes increasing on the LED side, or there's not material change in terms of, say, per headlamp cost of LED headlamps?
No, I don't think there's significant change. I mean, so there is obviously impetus on localization. LED prices globally also are basically coming and stabilizing as what it was a few years ago. But obviously, LED still does command a much more better price realization than conventional lighting.
So in case of four-wheeler, the range would be what basically compared to LED? Is it like 3 to 5x that holds true, or it will come down?
No, it will. So again, it all depends on how much of LEDs would be. So there are lightings or products which are basically 5x also, and there are products which are also 2.5x as well. So on average, that's why we always used to give an average, which basically was giving about 2.5 to 3x. But again, it also depends on how much LED content, what kind of, is it just basically going to be one LED or just like a DRL in the lamp, or is going to be a complete projector LED type with all basically functions and functionalities LEDs. So I think that's what it is, which basically determines the LED pricing from vis-a-vis conventional.
And lastly, on this LED thing, basically, so what we've seen in most of the cars, basically, which have come up with LED headlamp, these are mostly projector headlamps versus, say, in case of Activa, it is a reflector-based lamp. So will the trend continue in four-wheelers, whatever LED that we provide, will it be a projector headlamp only?
I mean, see, the good part about LED is that it has not just aesthetic value, but also a performance value. Currently, as you rightly said, there are models which are projector lamps, but again, projector LED lamps would also basically change. Going forward, there are multiple other lighting technologies. One thing I can assure you is that given the regulatory framework change, given what basically, even the EV advent is coming in, whatever basically the connected vehicles are coming, I think lighting will start playing more and more significant role in actually vehicle dynamics, and also the electronics content in the lighting will keep on enhancing. Now, this could happen as LEDs, it could happen as lighting control modules, it could have multiple things. So this is just a natural transition, and hence the company is putting in significant investments on building in skills and electronic capabilities.
Oh, yes, that is true. I think the technology globally also changing very fast, and still you have a long way to go in terms of lighting technology, I think, compared to what we have globally. So thank you, all the best.
Thank you.
Thank you very much. Next question is from a follow-up from the line of Hasmukh Gala from Finvest Advisors LLP. Please go ahead.
I had a question on this LED share. You already clarified that very soon you will be getting to 50-50. So that answers my question. Only thing is this semiconductor shortage, does it in any case affect the transition to LED?
No, Anish, I don't think. These are global trends. These are high transitions, like saying that will semiconductor shortage basically change autonomous driving or electric vehicles. It would not. The point is that I think semiconductor shortage happened, and you have to understand why did it happen. It really happened because when it was a lockdown, so there was a massive surge on medical care and on consumer electronics. Will medical care and consumer electronics keep surging like they have been doing in the past? Maybe not. So if they do that, the electronic capacities through the auto sector will again be basically calibrated. And hence we feel this as a short-term shortage and not as a long-term consistent shortage.
Okay. Do you have any idea if semiconductor manufacturing is likely to happen in India anytime pretty soon?
I think you should ask our honorable union ministers for that. But I think the content very clearly is that India, unfortunately, does not have any fab facility as of now. There are discussions ongoing at various authority levels to see whether it is feasible or not.
Okay, fine. Thank you.
Thank you. Next question is from the line of Kuber Chauhan from BP Equities. Please go ahead. Kuber Chauhan, your line is unmuted. You may proceed with your question. Kuber Chauhan, your line is unmuted. If you could please unmute the line from your end. It seems there is no response from the line of the participant, sir. As there are no further questions, I now hand the conference over to the management for closing remarks. Over to you.
Well, I would like to thank everyone for joining on the call, and I would also like to say that we remain confident on the growing prospects of India and the automobile and the auto components industry. I hope we've been able to respond to all your queries adequately, and for any other further information, request you to kindly get in touch with SGA, our investor relation advisors. Please stay safe and healthy. Thank you once again for your confidence. Bye-bye.
Thank you very much, members of management. Ladies and gentlemen, on behalf of Lumax Industries Limited, that concludes today's conference. Thank you all for joining us, and you may now disconnect your line.